Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 19th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. Obviously a relatively quiet session yesterday with the US and Canadian markets closed for national holidays. And what we did see in the way of trade was really a pushback from the US dollar despite that closure of the US markets. Both the euro and the pound sterling giving up ground against a slightly stronger US currency. And there were also losses for what had been a resurgent Australian dollar and New Zealand dollar overnight. We'll look at some of the reasons behind possible falls, or possible reasons I should say, for those falls momentarily. The dollar was also on the front foot against the Canadian dollar and the Mexican peso yesterday, gains there of 0.16% and 0.21% respectively. And we also saw the dollar continue to take money off the South African rand and edge higher against the Korean won. Dollar index for its part largely unchanged, trading at 96.92 shortly before we recorded the video. Okay then, what's on the calendar today? Events that may move the markets. It's a busier calendar today, and we've already had some important data out of Australia in the form of the RBA minutes that were released at 12:30 this morning. To come at 9:30 GMT, we'll have claimant count and average earnings data out of the UK for the 3 months to December. Then at 10 AM, we shall have the ZEW survey data for Germany, its economic situation, current situation, and economic sentiment, and then we'll have the ZEW survey data at the same time for the whole of the Eurozone, and in particular the economic sentiment print for February. We pause then until 1500 GMT this afternoon when the ECB's Peter Priet will be speaking. And then another gap till 21:45 this evening when we'll have producer price index data, input prices these for the fourth quarter out of New Zealand. And to round off proceedings at 23:50 this evening, we shall have balance of trade data out of Japan for the month of January. Okay then, breaking news and comment that's caught my eye overnight. And firstly, the Reserve Bank of Australia minutes revealed that the bank is concerned about falling house prices and household spending in the country. The bank said it saw significant uncertainties in the economic outlook ahead, though it saw itself as a stable influence, shall we say, on the Australian economy. Meanwhile, China's Vice President Liu He heads back to Washington today to continue trade talks ahead of the 1st of March deadline. It obviously shows that the Chinese are taking it seriously when they continue to send one of their senior statesmen on a trans-Pacific journey to negotiate. But of course the clock is ticking and we're moving ever closer to that 1st of March deadline. Meanwhile, 16 US states, including California, are suing the Trump administration over the state of emergency imposed at the Mexican border. The legal action is intended to try and block the order. It'll be very interesting to see how that fares in the courts over the coming days. Right, food for thought and something to take away with you into the trading day and beyond. And why not think about this? Demand for and the use of copper is seen as a leading indicator of global growth, particularly within industry and construction. Research house IHS Markit flagged that the output, or PMI, from global copper users has hit a 10-year low early in 2019, with the index coming in at 46.8 for the month of January. Obviously, where PMIs are concerned, levels below 50 indicate contraction. The chart here, drawn from the IHS Markit report, shows global manufacturing PMIs versus copper. As I say, the copper usage is effectively seen as a leading indicator, and where that's heading is suggestive of a dip in manufacturing output. Perhaps not as steep or sharp, but it's hopefully not as steep as sharp as the one we saw in 2009, but you get the idea. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative who'll be happy to take you through those. And please do read this risk warning thoroughly. Thank you for your time today.